Good day, I'm Dr. Chan again. Today we'll continue to talk about the stock investment strategies. Characteristics of type of investments. You can refer back to my left hand side. There is a type of stocks. So many stocks that have different purpose. Let me explain quickly on each of the purpose. Yeah, for example, if you're looking for blue chip stock, of course, uh, the investment is quite constant returns and a safe investment that is able to generate you uh, profit constantly. But this is not a good investments for short-term periods. Normally, you need to be longer periods. For the competition's purpose, you should not focus too much on these uh, very stagnant stocks that won't move a lot. In fact, you should target on blue chip stock, those that closer to the annual report announcement date or closer to the accounting closing periods. For that, if they have a good performance, the stock will move. If they have bad performance, the stock will also move in different directions. So you can play around with that and looking on the blue chip stocks that have that type of criteria that near to their closing period during this 1 or 2 month period's time. Okay, second, you can also look at this is more on cyclicals, cyclicals type of seasonal cycles, business cycles. Some they based on the quarterly performance. Some they because of the uh, different weathers, so they maybe have a seasonal issues, winters, summers, this type of effects. You should look at also uh, because we are trading in these regions, then you need to look at the public holidays, seasonals, public holidays or seasonals, New Year's in these regions. Next is defensive. Uh, this type of stock is more or less stagnant. So the movement of the stock also will depend on the company performance. And you can look at the accounting closing date, seeing by this quarters how is their performance if you decided to choose the stocks on this. Uh, Normally, this defensive stock is quite constant. They're paying a stable dividends, and also their share price won't move a lot. Next, growth stock. A stock that be classified as grow means the company have potential to grow. Yeah, and also the timing is very important. Okay, you need to know when uh, the new maybe R&Ds or new product launchings that will shoot up the grow the sales of the company. So you need to monitor this potential of earning profit for this company. These type of companies, when they earn money, their growth will be going up and they can expand. The stock price also can shoot up double, triples. Next, income stock. This is more stable for long-term investment that they need some income by paying dividend, not so much on the share price movement. But for the completions wise, because you are in a short-term periods, you are targeting on a more movement stock. So income stock you can skip. Next, uh, large capitals. This is large capitals based on the market cap. market cap is large. Of course, large capitals always very stable. Okay, and we also have medium cap and small cap. So small cap movement of the stock will be more active compared to the large stock. Large stock is quite performance wise, they are quite stable. So you can target on a small cap for these competitions, and also you can target on this period because it's too short. So small cap is good for you to target on. Next, micro cap or even smaller. Okay, micro cap even smaller. So of course, it's high risk, high gain. Small cap will be provide you the high gains. So you can also select those that got potential, good promise by the companies, and also a lot of researchers that support the micro cap. Okay, the last two is pending stock and value stock. Pending stock, you cannot invest because of the rules say that they're not allowed to do pending stock investment, and it's quite risky pending stock investment because uh, they can go until zero. Okay, so value stock is the common stock that attract a lot of investor because of the undervalue, and this stock normally they will be recommended, yeah, to buy and hold a period of time, because currently maybe company may have some problems or some difficulties in the market situations. That's why the stock is already uh, being undervalued. But in futures, they will recover or not. We still don't know. So this is quite a risky stock also. So unless you have a horizon longer, then you can go for that stock. But if no, then we are focused on what I discussed just now. Thank you for watching. Bye.